For the fifth consecutive time, the Reserve Bank of India has decided not to change the interest rates. Now, when we talk about central banks like the RBI, one of their key tools is managing interest rates, which essentially determines the cost of borrowing money. When they increase interest rates, it becomes more expensive to borrow, which helps reduce the overall money supply in the economy, bringing inflation down. And lowering interest rates makes borrowing cheaper, stimulating economic activity. Now, globally, countries were grappling with the challenge of inflation, which is the rise in price of goods and services. One way global central banks manage inflation is by adjusting interest rates. As we explained above, raising interest rates is a common monetary policy tool to curb demand in the economy and bring down the inflation rate. Now, in its fight against inflation, RBI has raised the repo rate 6 times since May 2022. This series of hikes has taken the repo rate from 4% to its current level of 6.5%. Now, in the recent meetings of the Monetary Policy Committee, they've decided to hit the pause button on these rate hikes, keeping the rate steady at 6.5%. This decision aligns with market expectations driven by favorable inflation figures. Retail inflation, for instance, dropped to a 5-month low in October, reaching 4.87% from 5% in September. Now, this move brings it closer to the central bank's ideal target of 4%. Now, there are 2 more important things that came out of the MPC meeting. The MPC decided to remain focused on withdrawal of accommodation. This simply means that they're aiming to control the money supply in the economy, which in turn helps manage any potential upward pressure on inflation. Now, this is to ensure inflation progresses along the target of 4%. The central bank also revised its GDP growth projections for fiscal year 24 to 7% instead of 6.5% it had projected earlier. Now, this is after the second quarter's GDP threw in a surprise by coming in at 7.6%, much higher than the RBI's forecast of 6.5%. The decision to keep the rates unchanged wasn't much of a surprise as markets were expecting it. However, as RBI keeps the repo rate unchanged, Nifty also crossed 21,000 for the first time. Now, this surge is attributed to investors finding confidence in the central bank governor's monetary policy speech. Governor Das emphasized the Indian economy's resilience amid global uncertainty and revised the country's GDP upwards by 50 basis points. Now, this fifth instance of refraining from rate hikes does bring relief to the markets. Investors and businesses closely monitor policy decisions as rate hikes can increase borrowing costs, exerting significant impact across various sectors of the economy. Hence, this fifth pause is indeed a welcome respite. Having said that, this is me, Merlin Zana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.